You know, we're on the verge of some pretty big demand here in the crypto market, but we're also on the verge of some pretty big demand for ADA itself. And you could, take your pick, right? Whether that's enterprise interest, whether that's retail interest, or whether that is institutional players letting you know that their demand is in fact rising. And I want to talk about that with you guys. There was actually a couple comments here. I do want to discuss one of this relating to institutional money, the other actually relating to the 4-year cycle. And I want to show you guys just a little bit of information here that I'm paying attention to. So if you guys are new or haven't already, show your support for the channel down below. Hit that subscribe button, that bell. It's free to do. It'll keep you updated anytime there's new content live here on the channel. So there was something I didn't get to talk about in my earlier video, and I want to make everybody aware of this. Guys, we are so structurally sound in this pump in terms of ADA. It should get you very excited. This is, for all intents and purposes, a healthy pump. ADA is following what it does historically speaking, and that should give you a lot of confidence here. Now, what I will say is that we were obviously talking about how ADA was following structure on the way up. It was traversing these ranges, testing the bottoms and the tops to perfection. And that's exactly what we've seen up here, even as ADA has dealt with a little bit of resistance. And it's more so been us fighting resistance from the crypto market, because everything else has just kind of been blah the last several days. And ADA's actually done well, apart from obviously this morning, right? Now, we actually saw ADA run all the way up to about $1.02, get rejected, came back down, actually touched 90 cents. Right? That's the edge of our range here. Got a little bit of a push on yesterday's candle, got up to about 98 cents, rejection overnight, came back down, touched about 90 cents again. So what I will say here is that if things turn to shit over the course of the weekend, or we get into the early part of the week and we see some dumping throughout the space, you could in fact see ADA come down to, 87 cents, which is where our longer term trend sits. If we go down a little further, you could be talking about 84 cents, which would actually probably meet up with our 20-day moving average. That'd make for a technical bounce, guys, that would make a lot of sense. So don't shoot the messenger. I'm not being bearish or anything like that. Just know that if everything is just kind of blah and crap in the market, we could be coming down here before making our bounce. Not saying that has to happen, because again, ADA has separated itself just a little bit from the crypto market. And if conviction stays high, this is also a zone you could bounce out of. And maybe we try to take another stab at $1.08. And I'm not saying that we have to stop at $1.08, right? That's just the edge of our range here. We could very easily extend, into the $1.20 range, $33, testing that high from all the way back here in December. That'd be a very exciting sign, but just understand it's the weekend. We might not get a whole lot over the course of the weekend itself. Now, here's what I really want to talk about. It has to do with institutional money. And there was actually a comment from a viewer. That's the wrong one. I'll get to that one in just a moment. There was a comment from Crowd Control, and some of this I agree with, some of this I disagree with. And what he said is people need to stop buying on what institutions say and buy on what institutions do. That's what I agree with. Then he went on to say, you're not going to get an edge by buying early. You'll lose long before you gain. And I completely disagree with, because right now, what institutions are doing is they're letting you know where the demand is. For the people that haven't pieces together or don't know how ETFs work, it costs money to create an ETF and launch an ETF. All right, a crap ton of money. Okay, here's just a little bit of a breakdown for you guys. You guys can search this out yourself as well. But you're talking about hundreds of thousands of dollars to launch an ETF product. The reason they are launching ETFs is because their clients are showing demand. So we're at a point now where ADA institutional demand is in fact rising. We now have, I believe filings including ADA 5 different times, whether that's ADA spot ETFs, leverage ETFs, basket ETFs. ADA's in now 5, potentially more of those just here in the US alone. So institutional clients are letting you know, yes, we have a demand for this product. And this means that we are in fact early. Has there been some accumulation that's been done behind the scenes in preparation of this? Yes. Remember, they typically require at least $2.5 million in order to even launch these ETFs in the first place. But if you take a look around the space at what institutional demand has led to in the past, take a look at the Bitcoin spot ETFs. Take a look at the Ethereum spot ETFs. Started quite small, very low demand to begin with, and then they accelerated. as institutional clients gain more access and gain more interest and saw what crypto was doing, it led us to some pretty exciting times. So yes, right now we are in fact front running institutional players, and it's going to grow over time, right? Institutional demand is increasing, enterprise demand is increasing, government demand is increasing, and guys, retail will obviously be the thing that comes last. It's one of the last things we're waiting for. And I think that there's just this huge disconnect right now. And that's why me personally, I'm completely comfortable sitting on my hands, not doing anything right now. Whoa, that was weird. Sitting on my hands, not doing anything right now, because I know that there is much bigger demand that is going to be hitting the market. And that brought me to this comment here. And this is from Jay Andrew. He said, there will not be a super cycle. The 4-year cycle is alive and well. I heard the same crap in 2021. And here's the thing. I was around back in 2021. I wasn't hearing anybody talk about a super cycle at all. And frankly, we did not have the things that we have now. Again, going back to enterprise accumulation, enterprise adoption, we are back in 2021 wasn't really a thing. Yeah, there were some companies that bought it, but what we have just seen is some of the largest quarters of accumulation on the enterprise side. We now are getting legislation passed that is allowing crypto embrace for obviously the government, but also green lighting retail. Retail is a big thing we've been waiting on in this market cycle, but we also have institutional demand. I mean, right now, there are a lot of things that are basically giving us this huge wave of embrace, and that is exactly what accelerates us from this 5 to 6% of the world in crypto right now to 10% to 20% to 50%, right? And I'm not saying that it's all going to happen right now. It's not what I'm saying by any means, but there will come a point where that switch just flips and it starts happening a lot faster. And I wanted to show everybody right now, when we look at this bull market peak indicators from CoinGlass, you guys can see we're still at a 0 out of 30. So we're not anywhere close to this market cycle top, at least from an indicator standpoint. But let's take a look at something else here as well. And I think that this is actually going to be a really good gauge for where we're at. This right now is BTC dominance. And what's interesting about this is BTC dominance tends to follow some very similar trends. We obviously have our BTC dominance cliff where we have our big drop off when that begins. And right now our range low that we're probably going to see in this market cycle is somewhere down around like 42 to 43% or so. And what's interesting is I looked at the time frames on this, and if we follow the exact cliff that we saw last market cycle, BTC dominance basically bottomed, it hit the bottom of its trend 130 some days after we saw our peak. And what this would actually put us at right now is a November of 2025 top. Now, understand this. When we did see us hit this floor all the way back here, that was in May of 2021. It didn't mean that the market cycle ended. That just means that was when BTC dominance kind of stopped dropping. Yeah, there was a couple lower lows here, but that was when we basically saw BTC dominance bounce. And then actually, even from that time, we saw a lot of rally even beyond that led us to some good altcoin performance. In fact, some of the best altcoin performance came as that progressed. And that brought me to this time frame. From basically the peak to when we saw the end of the market cycle was actually 302 days, which currently, if we follow that trend, that actually puts us at a top somewhere in April. All right. And that actually shows late April, which would make a lot of sense. I think I actually mentioned potentially late April just the other day. Now, this video is kind of getting away from me a little bit as far as time goes, guys, so I apologize. But the point I'm trying to make is we're just getting into some of the good stuff. We have not triggered retail yet. Institutional demand is climbing throughout the space, right? Enterprise demand is climbing. That's why I'm saying that this 4-year cycle that we're used to is probably going to be over. Whether that means we enter a bear market, but it's a shorter bear market, or if we get kind of just a shakeout in the fall that leads us to even some further extensions, the data right now does not support the top being this fall. That's what you need to know. And maybe that'll change as we get close to that time. Maybe we get a massive surge in terms of price sometime in the next, several weeks here, and that leads us back to a traditional market cycle. But it's not showing it right now. So that's all I got for you guys. I appreciate you as always. Hope you enjoyed the video. Let me know your thoughts below. Do you think institutional demand for ADA is going to hit hard? Are you thinking that we are still on track for a 4-year cycle, or are you seeing something much, much bigger coming down the pipeline? I will say that, if we, not to go back on a tangent here, but if we do see this market cycle end at a normal time frame, we just broke the adoption curve, which is not a good sign. But I don't think we're breaking the adoption curve. So have a great day. Share your love below. Catch you guys in the next one. Take care.